Hello, good morning, everyone. Welcome back. I hope everyone had a good weekend, one that was rewarding, refreshing, and one that leads you to a good week of trading this week. So, just want to welcome you back. Thanks for joining me this morning. Yeah, Richard and Jay Stores so far. All right, looked like the London session gave us about 50 to 60 point move down from 3 to 4, and then an equal move back up from 4 to 5 or 4 to 6. I also took a look at the comparison chart this morning. Looks like we're still showing what relative weakness between the three pairs in Nasdaq. So Nasdaq still has quite a ways to catch up if there are higher prices sought today. We'll take a peek at that in a moment. And I also took a look at the calendar. We don't have any news today, medium or high impact news. So we won't have any of that to worry about or anything to look out for. Weekend was good. I didn't. It wasn't anything too crazy, but I know I did have a really good weekend. I did some good back testing. Also, had some family time, so it was a good weekend for me. Trying to catch up with market structure here. I think I got it correct. Hopefully, I didn't make any mistakes. If I did, someone yell at me and let me know. Small little breaker in here from this morning. Looks like we had a wick push through the lower end of it. However, looks like found support in this fair value gap. Was able to clear these equal highs. That was an 8:30 move there, or just before, between 8 and 8:30. Oh, jeez. Oh, nice. NKD. So you were knocking it out of the water out of the park on NKD. NQ. Oh, okay. NQ didn't work out for you. All right. Well, J Stores, let's see if we can't do better this morning. Can't find an NQ trade that we like, one that's moving in our direction. Hello, JR. Good morning. Sniper. Good morning. Apple, Google, Metal. Annual report soon. I used to not pay attention to that stuff, Richard. And then a few people, once I started doing the live streams here, there are some people who pay attention to that, who follow the stream, and they came in one day and started talking about it. And then I started noticing that when they have earnings announcements on the days that they have them, on those days, the power hour 3 to 4 o'clock, and then sometimes 4 to 5 o'clock can be quite explosive on the days that they announce their results. So it does seem to impact not necessarily just futures, but definitely the futures indexes that those are included on. So Nasdaq is heavily impacted, but I think Apple may also be on one of the others, either the S&P or the Dow. I can't imagine it being on the Dow, but anything's possible. But I think several of those, since they're such large companies, that they're on multiple indices. Shorting above 387. Righty. Okay, Snipe will 387. Okay, I see. So we do have a 1 hour fair value gap here that most likely will be restrictive to price movement upwards, at least its first pass. So we'll see when price breaks above the midnight open, if it is able to break above the midnight open, how price reacts in this area. 2 p.m. candle. Fuego, good morning. What's going on? 2 p.m. Take a look at the session highs here for just a second. We got 5 minutes before the opening bell here. Okay, so we see the London high has been traded to. The London low and the protected low are the same level. Okay, let's see. The Asia session is from 8 p.m. till midnight. Okay, we have an Asia low that has not been traded to. But then the Asia high has been traded to. Asia high is these equal highs here right at 17,270, and we clearly traded to it in this area. Hello, Robin. Good morning. How's it going? Janus, Ralph. Good morning. All right, appreciate that, Ralph. So is Apple just on Nasdaq, or is it also on S&P as well? All right, so the opening bell has already been released. So we're in the middle of that now, the last minute here. We'll see where price wants to move to, which point of liquidity it's driving towards. Hello, Molly. Good morning. Give me 2 minutes. I'll be right back. Wait, I'm back. Okay. Nasdaq only. Okay. Appreciate it. All right. Did we get another retest of the breaker here? All right. So it gave 18 points out of the breaker. For anyone who took that entry, whether you're looking forward to sweep equal highs or just a quick scalp. Amia, good morning. Pretty big fair value gap here. Let's see if this area is able to hold. Just a tick or two into slow S&D area here. Traded back into as well. Down at 17,264. That's where you see the bottom wick is. Okay, so we got up to 290. So we got 20 points out of this breaker. Still got a portion of it. Okay. We have that gap, and then we have the regular trading hours gap, which is all the way down to where it opened yesterday. I'm sorry, from where it closed on Friday, so around 2:15. So basically from this opening gap here until where we just opened at 9:30. So from about 180 to about 270. All right, looks like we did reach up and at least equal these equal highs, relative equal highs here. So now we've had a trade from 270 all the way up to 307 out of the breaker there. So about a little over 35 points for anyone who took that entry. Yeah, below the Asia low. Okay, down to about 180, 17,180. Yep, so it's my new week opening gap. What you see here in the lime green, the really bright green is the new week opening gap. 180 up to about 230, so about a 50-point gap there. Okay, Jack, appreciate it. I'm gonna stay away from new prop firms. I'm just gonna stick to the ones that I'm already affiliated with. But if I do need a new prop firm, I'll be sure to ask. Good. Appreciate that laughter. I thought Apple was one of the companies that was on multiple indices. I appreciate that. Thank you. So Richard, that should answer your question there. wicks here. Keep pushing up right in this level and getting rejected back down. Hello, Caesar. Good morning, HCE. How's it going? All right, there's the high being taken. Right now, we're full trading 50 points above the breaker. Nice. We're now find ourselves in the macro. Hello, Queen. What's up? Good morning. And we can. Okay, I didn't quite close up 50%. Oh, Triple C, good morning. All right, we're watching to see if we can get a retracement down at least to this area here. Let me see if I can put a fib on and see what the measurement is. So I'll take it from the wick. Yep, just past 50%. Down to at least 17,298 and see what the reaction is from price at that point. Right, so actually, there's two different. So we had the breaker here that was formed at around 4 o'clock, confirmed at 4:45. But we also have this one that I just noticed. All right, so we had a low here, push up to a high, push to a lower low, push up to a higher high, closing above the breaker. Trading back, actually it closed below, so I don't know if that technically would invalidate it. It did quickly move back into the range, into the zone on the next candle, and then eventually ran up the target. So maybe this one is weaker than the one below that was formed at 4:45. But I just wanted to show the formation of a second one as well. All right, we'll get back down to the 1 minute. We still have another 10 minutes on the macro. All right, so we see this level here didn't hold and price did not react to it. We do have to remember we're in the opening range still in the first 30 minutes of trading this morning. And so price will likely want to run to some other session highs if some are open that are nearby. So that's why we may not see like breakers and that kind of thing hold after they're used one time, because then price may want to break through. Like this breaker here, price may want to break through it to take out the London low. And we also have the Asia low down at 17,201. You're short TP at 290. Okay. All right, Queen. Well, you already reached 290. Still bullish. The last time I checked the dollar, it was retracing pretty heavily. Okay. Yep. I mean, it is bullish, but it did give a nice, nice retracement after reaching buy side liquidity. So this hour, we should pay attention and see where the dollar is going. Okay. So when price takes a higher time frame PD array, you start looking for new breakers. Okay. Yeah, let's just mark up the whole breaker territory. Let's take a peek over and we'll look at the comparison chart here. So this was the 9 o'clock plus the opening bell candle, pushed much higher for the US dollar, sweeping the highs from Friday. So it's already taken out Friday's highs here at the opening bell. Immediately following, we got a retracement back into the range, and now we're looking at the follow-up candle to see where it might want to go. With that being said, we saw the opposite happen on the Dow last hour, push lower into the bullish fair value gap below, reaching nearly the lower edge of it, rejecting, closing above. And now we see the following candle pushing higher into a bearish fair value gap. Not quite confirmed yet, so we'll see at the end of this hour whether this is a fair value gap or if price trades above the zone, and thus not confirming the gap there. All right, so the other two indices, we do still see bullish fair value gaps below current price. So if that it continues to hold and pushes higher, we can see sweeps of the morning highs so far. So we'll have a new high of today. High of Friday is still a little ways away for both S&P and Nasdaq. So we're not really focusing on that at the moment. But we do have some swing highs from a few hours ago that price could trade above, based on the bullish fair value gap that's just below us. Right. Um, it's a good question about which one Queen was talking about. Typically it's going to be about I consider it an hour and above. Um, but really depends on where you're looking at price normally, and where do you enter. We typically on this channel look at the 5 minute and try to enter off of that 5 minute time frame. So based on that higher time frame, generally I like to consider it as two time frames above. So the 15 would be one time frame, and then the hour would be two. So I would start with the hour. Okay, we bounce once again in the fair value. I'm sorry, in the breaker block here. So far, about a 20-point push out of it. Vivian, good morning. How's it going? The key levels below us, 830 open at 17,260. Protected low at 246. Midnight open at 239 and London low at 233. TJ, good morning. What's up? Yeah, I still have the 15-second chart on my other screen. Well, I pull it up sometime. It's usually probably on the 1 minute, and then when I need the 15-second, I'll do that. But you're right. I don't use it as often. Still something I'm still working on. I'm not as good as I need to be on that time frame to properly execute regularly. Get a condo. All right, time to be a part-time resident. All right, so this 1 hour fair value gap. It's a small little sliver here. Not sure if you guys can see it. So far, price has traded into it and stuck right to the lower edge of it. Let's see that low is at 17,252 flat. And so far, we're getting a rejection out of that area. So we'll see if the follow-up candles continue to push or if that is going to be an area of support where we now see higher prices. Yep. Yeah, you're right. Yeah, I'm not looking for this breaker here to hold much longer. It was good that we got the bounce both here at 7 o'clock, once again at 8, and then again at the opening bell right here, 9:30, pushed us higher. So I think this breaker may have exhausted itself and done its job. Because I know we have the London low and even below that, the Asia low way down here. Plus we have the new week opening gap price might want to trade into. So there's a lot of things below us where the breaker may not hold. I will be right back. Let me go ahead and refill my coffee. Just give me a moment. did I miss? Okay. Alrighty then. Let's go ahead and clean up our chart here. Okay, London low traded through, Asia low traded through. We are at 10:30, so that means we are too late for New York, but we'll still look and see where they were. All right, so the New York low fell first, then the London low, then the Asia low. And the New York high is at our protected high right now. Okay, cool. Oops. All right, so it looks like our new week opening gap is being traded into as well as our regular trading hours gap. Regular trading hour gap is almost over at 17,179. Yep. Way to go, Queen and J Stores. Good job. All right, I'm going to go back to the electronic trading hours here. Dollar, see where it is. All right, so the dollar and all indices are selling pretty heavily this hour. Excuse me. $70. Appreciate it. I don't know, TJ. TJ said full moon incoming. That means it's selling. I think that's what he said last week. Full moon equals sell off. Oops. So we got about, looks like in 5 points maybe of the new week opening gap being completely filled in. We didn't quite reach 17,179, so that's the little portion that's still open. There we go. Each store is going to have its own prop firm, all right? And 230. All right, Queen, let's measure this up then. If you say we could swing half of this, so just below the 830 open, 17,256. All right, see if we get a bounce around 208 if we go that low. Yeah, that 8:30, somewhere between midnight and 8:30 open looks like the magnet for now. Or say, let's see if we get a bounce at 208. Let's see, where were these wicks at? 208. So let's see if that supports price. And we maybe get a push into the midnight, possibly the 8:30 open here. All right, we're inside the macro here, so see if there's a market structure shift or a continuation of something brewing during this 20-minute time period we have between 10:50 and 11:10. Right at it, 190. Look and see if that low is broken, the swing low from to the left. And as I'm speaking, yes, it is. All right, so that's fully traded back through the new week opening gap. We're getting ready to be at the close of a 5-minute candle. We want to see if the 5-minute closes below the previous swing low. Here, we need this candle to close below it in the next 5 seconds. All right. Shift our protected high down. All right. We have Friday's low down at 17,113. So if we continue to push lower, that's where our previous day low is. Then we have a few old levels down at 17,084 and 17,053. Those are probably back from January or maybe even late December. Oh, 30-second breaker here. All right, we just started a new hour here. So if we go to the hour chart just to take a peek here, because of the bearish momentum from last hour, which was pretty strong, if we don't build back up this hour with some bullish momentum, then we're gonna be stuck with we're not necessarily stuck with, but we're gonna have a fairly large bearish fair value gap created and confirmed at the end of this hour if we don't start building back through this new week opening gap. So that would, if that does create and confirm, then that would lead me to believe the afternoon will likely be bearish. We'll wait until that time comes to confirm that. But I just wanted to let you guys know that I'm looking now at this previous candle from last hour to see how much of this will this hour trade up to. And it could be none. It could be it won't trade up at all. It'll just continue selling. But we'll see. Splash, what's going on? Good morning. Um, I'm just patrolling at the moment. Nothing going on for me. 3%. Trade. Good morning. How's it going? Ooh, HCE. Yeah, it's quite an endeavor, but you'll get locked in. Don't worry. It's a fun ride. It's just long. All right, a little break of structure here just before the macro ends. Let's get back up to the 5 minute now. Ask Petrochem. Good morning. What's up? Awesome. Glad you're enjoying yourself, HCE. Just stick with it, and if you have any questions along your journey, just make sure you let us know. Hey, let's do a quick check-in on the dollar and the other indices. All right, so we did have the last hour retrace back down into the fair value gap that was created earlier this morning. So we had a push into external range liquidity above this most recent high here. Boom. All right, and from there, the rejection down into the fair value gap. Now we see it slowly building back up. Let's see what happens when it gets to consequent encroachment of this previous candle, which it's really close to right now. Also, depending on how high it builds, it's either going to be a bearish fair value gap or not. So at the end of the hour, we'll look and see if that's remaining. So we move over to the Dow. Dow finally, for several hours now, has been selling even when the dollar was building up. So was the Dow. The Dow was buying the whole time. So it looks like closed in the gap right here. And we'll see how low it wants to go. Let me go ahead and mark up maybe the next area. It's also inside of a bullish fair value gap. So this could be an area where price wants to turn around and trade back into this range, depending on if it leaves a bearish fair value gap or not. All right, same area for S&P. It's sort of a opening gap area. Same for Nasdaq, opening gap area. Except Nasdaq is trading a little bit lower, whereas S&P is still inside of it. So let's go ahead and mark up the swing low for Nasdaq, down at 17,113. And I think that's what I have marked up as Friday's low anyway. So that'll be a good level for us to monitor and see how price reacts once it gets there, because we're about 35 points away from that now. All right, so for this hour so far, we see the dollar buying and we see the three indices pushing lower to the low of the day. All three are at the low of today. Oh, the snake Jake, appreciate it. All right, guys, I'm going to grab my last cup of coffee. I'll be right back. Oh, it's your other one. All right, Rich. Appreciate you. Just now seeing that. It's awesome. No, I appreciate you, Richard. Thanks for the extra like there. Okay, see now we have gotten all right. Let's see if we can break through this protected high, creating a smaller market structure shift, and see if we can't get a push to the upside that may carry through lunch. Yeah, Queen, I drew the 1 minute breaker here on the 5 minute. All right, so it looks like it would have reached my TP, but I was not in the trade because it did not turn around, it did not retrace back down and tap me in. All right, so now we have a trade above. Now we have flipped. Yeah, this is true, Queen. You're absolutely right. Yeah, I could have entered at 17,190 because I was watching it well before it was even confirmed. I should have gotten in at 17,190. They were already at 17,215 is the high, I think. Yeah, so it's already ran 25 points, which would have been a quite a nice trade. Yep. Next time, Queen. I'll get in next time. There's always a next time, right? Yeah, I hope that everyone who's watching and still a little iffy on the breakers, hope you're able to start to see them forming a little easier now, or you're starting to get into the rhythm of how they form to where you can see them yourselves. Two and the one. So this is what it looked like on the 1 minute. Essentially, we had a low put in here. We had a retracement, a deeper low placed, and then immediately following, we had a higher high placed over here. That high was swept, traded above, and closed, confirming the breaker. On top of that, we have here, and we have another one just below right here for our unicorn setup. And this is why you see my limit order down here because of that unicorn setup. I wanted to try to get in somewhere around 50% of the breaker, and 50% of the breaker is exactly the same value as 50% of the fair value gap for the unicorn right here. So I was thinking that was my optimal entry. I placed my limit order just a couple points above, just in case it got close, but not all the way down. But as you can see, it didn't even get close. It barely retraced into the breaker, couple candles, and then I went up and delivered about 25 points already. Do we have anyone unclear as to why this is a suitable breaker to take a trade on? Had a couple of people ask for me to continue to show my setups and basically show when there's a viable trade that should be entered. So I'm just asking the question, is there anyone who is unclear about why this breaker is a good setup? HCE, are you saying that you're not sure why this is a good setup to take? Okay. Sure. All right. So again, this goes back to market structure. So you have to follow where market structure is and how it's flowing. Okay. Fair enough. All right. So let's start here at this low. We'll start here. Right. So right down here, when this low was made at 10:30, the high that pushed price down is off screen. It's way up here somewhere up top. So we won't worry too much about it, but we know that this is a low that was pressed in. Then we start to see it retrace, start pulling back higher. Then we see this low broken right here. So when this low is broken, then that means we have a protected high that's really close to us. It's right there, right? And what the protected high does is it flips market structure back the opposite direction. We're moving downwards. If we take this high and close above, then we could believe that we're going bullish again. Okay. So after this was traded below and closed, we moved the protected high there. We see another retracement here. And then we see a further trade lower and closing. So now this level moves from up there to down here. Right? So now we're looking at, if we get above this level and close, we're bullish. Whereas we're already moving bearish, we want to flip the other way. And that's what a breaker is. A breaker is essentially a reversal pattern where price moves this way, then it moves the opposite direction, retrace back down and takes off. All right. So this became the protected high once this low was made over here. And we start seeing price build up once again. And then once it takes the high and flips price back the opposite direction, you know you have a breaker in that moment. And the breaker is the last retracement leg before liquidity was swept. So liquidity in this example would be these lows. So price swept these lows, and it's immediately after sweeping the lows, it started building and buying up and putting in higher prices. So when that happens and you have this level taken and now we have bullish price structure, then what we do is we just look for the last time price retraced before sweeping down. That leg there becomes the breaker. The closure above becomes the confirmation. The retracement back in becomes the entry, and there's your breaker, and there's your winning trade there. And then from there, you can really target whatever you want. The easy places to target would be like a swing high, something like this, the most recent one. It could be the midnight open because it's right there. So if this swing high wasn't here, but we had the midnight open, you could target that level. So you just look to the left and try to figure out where you think price might trade to. Now you also have some fair value gaps here, so you have to keep that in mind. We're on the 1 minute, so it's not a huge issue there. If we were on maybe the 5 or the 15 minute, then maybe we want to look for that. Also, you want to check these kind of areas where price did a small retracement before pushing lower. A lot of times they will trade to mitigate some of these S&D areas before moving lower if price wanted to move lower, but you still could be able to find a winning trade in this price movement of 30, 40, 50 points back up to some level that it wants to sell from. So even though we prefer to take breakers off of the 5 minute, you can take them off of the 1 minute, but you just want to make sure that the breaker is actually changing price structure. And hopefully it's ideal if it was inside of a bullish fair value gap. We don't have one at the moment, so that makes this one a little less likely to work out than if it was in a bullish fair value gap. However, you can see it did deliver. If you would have gotten in at the top, and this is the most aggressive entry here, 17,190. It ran up to the midnight open, put a body on it at 240. So that was a 50-point trade there. And that's if price still wants to be bearish. Like, it doesn't have to trade higher all the way up into the heavens. To just all you're asking for is for a price run of at least like 30 points. And in this case, you got 50. Averaging in from 200. Okay. Sweet. Yep. So the entry, Richard, is at any moment after the confirmation. The confirmation is the close, the body close that's above the area. So that would be this 1126 candle. So at any point afterwards, 1127. Now what Unicorn Queen does when this candle closes, she enters immediately. She doesn't wait for the return back in. She doesn't wait for any of that. When this candle closes above to give her the confirmation, she's in. That's one entry. Now, if it comes back in, then she takes a second better entry, which then gives her average entry a better position, but she ensures she gets in. So everyone has their own style and strategy for this, but the ideal entry would be on the retracement back in. So at 17,189 on the 1127 candle. If we could get down into the fair value gap, one of these two, then that would have been a better entry that you would have taken, but it never worked out that way. So especially when you're doing multiple contracts and you're in with micros, you can take the aggressive entry first to ensure that you're in the trade. Take a more conservative entry if you get a retracement down. I was going to go in with only one contract, so I took the conservative approach. But as you see, that approach didn't lead to a trade on this setup. All right, we need to get off the 5 minute. We're not in a macro right now, so let's go back to the 5 and see where we are as far as price structure. All right. We left us on the 5 minute, really sizable fair value gap here, which overlaps the upper quarter of the breaker. Yep, definitely, Richard. The body, not the wick. J Stores, take it you had a good weekend. Yeah, Splash, you're right. The 5 minute did not give a good entry. You can see the 5 minute when it traded up and confirmed the breaker, it was all the way up at 206, whereas the breaker's down at 190. So you're already 16, 17 points above the breaker when it closed. So yes, in this case, the 5 minute was not optimal. Let's look and see where the 3 minute was. Okay, the 3 minute wasn't terrible. Okay, it was about 3 or 4 points above, and then the following candle did trade back into it. So yeah, so anything from the 1 to the 3 minute was the best entries for this particular breaker. This was the earlier entry this morning, and just like I mentioned before, that to make the most recent breaker that we were looking at that was a little bit lower than us, I said what would make it stronger is if we were coming out of a bullish fair value gap on the 1 hour. Here is this morning's short just after the opening bell. We have a bearish fair value gap on the 1 hour, so price trades into it. And when it trades into it, then you'll start looking to see if it wants to reject out and create a breaker setup. And that's what we got here on the 3 minute, where you had a low here moving into the high, moving back down, making a higher high, and then making a lower low. Confirmation on this candle, the 1015 candle. Next candle trades right back in just barely, and then to the floor it goes. So even this one also didn't give you a 50% entry. There is no fair value gap here for the unicorn. So you would have just been taking it out of the breaker and trading it lower. And that extra, I guess, support you needed to feel comfortable in the trade would be this fair value gap up here that you know it was being resistance to price moving higher. And so going lower was where price wanted to go. Plus, we also had the regular trading hour gap as well as the new week opening gap below. Also, at that time, we had the London low wasn't traded to yet. The New York low hadn't been traded to yet, and neither had the Asia low. So we had all the liquidity points were below us. We had a 1 hour fair value gap above us. We had on the 3 minute, we had a breaker created. And if I'm not mistaken, breaker, okay, no, it was confirmed after the macro. But so that was this morning setup at around 9:50, and then we just had one here at 8:20. So as you guys go back and review it just to see what the explanation is. Hopefully that's helpful. Yes, Richard. So if the breaker had formed on the 5 minute, that's ideal where I would like for it to form. I mean, it's better if it forms on even higher than that time frame. It's just they don't form that often. So if you start looking for a breaker on the 1 hour, you're gonna get one breaker per week or whatever. So it's not very often. But the 5 minute seems to be a nice sweet spot where you get a couple setups per day, and for the most part, they are high probability setups. And then you just work your way down. So the 3 minute is better than the 1 minute. Mm, yep. Okay, just checking in here at the end of the hour. The dollar is still pushing downwards, so it's selling. We have a late rally, just like what we're seeing here on Nasdaq, where the last 20 to 30 minutes have been pushing higher. We got that on all the indices as well. They all have pretty sizable down wicks. So the first 15 to 20 minutes of the hour they were selling, so that's good because there are bullish fair value gaps below us. Now let's see if we are going to go for any of the highs from this morning. All right, I'm going to cancel my limit order here. We're doing pretty well here with price action now, so I'm not going to test my limits on old price structure. Trade midnight open, pushing higher. on the 5 minute. Let's see. Yeah, absolutely. Yeah, the shift in market structure happened on the 5 minute as well. The only thing about the 5 minute, it just didn't retrace. That's the only thing. So if we go back to the 5 minute, right? So the protected high was here, traded lower, closed lower. Then it did a retracement, traded lower, closed lower. So then the protected high was here. So the shift in market structure on the 5 minute also happened at the same time. It's just that the candle was so strong that it closed well away from where the shift happened. And there wasn't a retracement back down. So nothing happened back down here to give you an entry. Price just stayed up here. Slight retracement, not even lower than the previous candle. And then here it's taking up new highs again. So yeah, the shift definitely happened on the 5 minute. We just didn't get a retracement. That's all. $60. Okay. The bearish breaker block from this morning. Yep. Oh, yep. Queen, I see what you're saying. Yep. 10-4. Got it. Like you said, 266. So this was the bearish breaker from this morning that sent price lower. This one. And you can see we're building up and we're getting close to it. So like Queen likes to say, trade breaker to breaker. Sell at this breaker until a bullish one is formed, which is here. Flip over, take the bullish one, take it back to the bearish one. Look at that. Sweet, sweet, sweet. Look at that. 12 o'clock now. All right. Everyone, thank you for this morning session. This will conclude what we had in store for this morning. We'll take an hour break. We'll be back at 1300 for the afternoon session. Everyone, take care. See you in an hour. Like the video on your way out and subscribe if you haven't already. I'll see you in an hour. Take care. All right.